How much does the great state of Florida tax you on $60,000 of retirement income? That's what we're going to talk about here today at the Heritage Wealth Planning YouTube channel. So before you jump off, say, oh, Florida doesn't tax us. Well, let's see what we're looking at here, because I think you might be in for a surprise. So if you like what you see here at Heritage Wealth Planning YouTube, don't forget to subscribe down below. And as always, got my little subscribe way to remind you to subscribe, playing mind games, brainwashing, subscribe. And then once you do, don't forget to hit the bell to be notified for future content. So let's dive right into it, my friends. Let's go to the Heritage Wealth Planning is a link we go to here, the URL, heritagewealthplanning.com. And you see the beautiful island from my home, Peaks Island in Maine. You see little boats there, right there, fishing boats or lobster boats. And this is the place we used to jump off growing up as kids, right up in there, and jump into the swells as a car ferry pulled back. Crazy. But then you want to hit Tax Tools. Interactive tax page, that's where you're going to go. All right. And let's see what the great state of Florida shall show us when it comes to Social Security and IRA planning. Then, as always, if you follow this page, you'll see that I have the federal interactive tax tool here. Taking a long time to load here today. I don't think it should load that slowly on your side. I think something with my Wi-Fi. But anyway, all right, so you got the tax foundation from the federal. All right, so you can create all kinds of different scenarios here. James and Kavia, Nick, and you name it. But then we want to go down here to Smart Assets. And again, both these groups have given me permission to use to embed their software on my website. And so when we're going to go to Florida, which is in our dark blue, which is very tax friendly, we're going to click on that. And that's what we do here is we always start with someone who's married, filing jointly, born in 1952. That way they get both standard deductions of $26,600. Now what we see is we have $20,000 of Social Security income and $40,000 of federal retirement income, which means, if I can find my trusty pen, they pay nothing to the state of Florida, but they do pay $28.71. I'm writing this down because I'm going to do a book on my books. When I'm done with these video series, I'm going to write all this in a book. So Florida's $28.71 for the feds. All right. So we got $28.71 and nothing to the state. So even though you only have $20,000 Social Security and $40,000 in IRA distributions, you're still paying $3,000, even though you don't pay anything for the state of Florida. So let's swap this around a little bit. Let's go to $40,000 for Social Security and $20,000 for IRA. And my presumption is Florida is still going to be zero, and it is. And here you got nothing in income tax. So a pretty significant difference, right? And now it has nothing to do with the state of Florida, but it's important for you to understand anyway, because even though you don't pay a state income tax, well, you're still going to pay a federal tax. Would you rather pay almost $3,000 in federal tax or nothing? Don't forget, it's on the same amount of income, $20,000 IRA, $40,000 Social Security, $40,000 IRA, $20,000 Social Security. So what we're going to do, we got to figure out why that's happening. And this is critical for you to understand. We're going to look at something called provisional income. So the provisional income is the amount that determines how much of your Social Security benefit will be taxed. All right. So what you do with provisional income is you take half of your Social Security and you add all your other income. All right. So in this case, we're going to use Social Security. We got $20,000 Social Security plus $20,000 other income, which gives us $40,000 total. That's our provisional income, $40,000 right down here. So half of Social Security plus IRA distributions is $40,000. All right. Now remember, we have $60,000 of income, but when it comes to provisional income rules, only half of your Social Security benefit is subject to the provisional income rules, which will be subject to taxation. So our provisional income is $40,000. So we start up here at $40,000. Married filing jointly, the first 32 is not subject to any taxation. 32 to 44,000, 50% of that amount is subject to taxation. And anything above 44K, 85% of that amount is subject to taxation. So here we got, right now we got 40,000 of provisional income, 0 to 32,000. So basically 32,000 of this 40 has 0 subject to taxation. Between 32 and 44, well, in this case, we only have $40,000. So we take 40, subtract by 32. That gives us $6,000, which $8,000. $8,000, which you take 50% of that. So that equals 4K. And then we have nothing over 44,000, so nothing subject to 85% taxation. So we have 4K of provisional income. All right. So now what we do is we take of our 40,000 Social Security, only 4,000 in this case is subject to taxation. 4K plus we take our other income, which is 20K, and that gives us $24,000 of AGI. All right. So we have, in this case, $4,000 of our Social Security subject to taxation, $4,000. $20,000 is our IRA distribution, so our AGI is $24,000. But remember, we paid nothing in taxes. Why is that, old Josh? Why is that? Well, as you can see, I've been through this many times, and the reason for that is 24 is our AGI minus 26.6 is our standard deduction, which equals negative 2,600 is our taxable income. 24,000 is our AGI, 26.6 is our standard deduction, minus negative 2,600 is our taxable income, which means we pay no tax. Now, if you inverse those, you have 40,000 come from an IRA and 20,000 come from a Social Security. The whole thing's different. You're paying almost $3,000 in taxes. And that's the point with Social Security, why it's so important to maximize your Social Security. All right, but now we're not done with the state of Florida. So that's just income tax. So let's just scroll down a little bit and see what else Smart Asset has to tell us about the great state of Florida and what else they do for taxes. Because we are going to have property tax. And that's the thing. There's no state income tax, but they certainly have property tax. They certainly have gas tax. They have all kinds of other taxes as well, sales tax. So let's see what the great smartasset.com tool tells us about these various taxes that they have in terms of making it tax friendly or not. So we can see it's bringing up and it's looking at the county that we're in, Florida, and we're looking down here and it's telling us exactly where the most tax friendly places are. All right. And so you can see in the map we got up here, which is in as Defuniak Springs, Santa Rosa, Marion. Number 10 is Marco Island. These are the most tax friendly places here. And what you'll see is what they're going to do at smartasset.com. Let me maximize this a little bit. What they're going to do at smartasset.com is they're going to take a retiree with $50,000 of income, of which $15,000 is coming from Social Security, $10,000 from a private pension, $15,000 from an IRA or 401k, and $10,000 in wages. So this is not the same numbers that I just showed you. This is somebody else, but roughly pretty close. And they're going to say, we'll use the Marco Island. So Marco Island, you're going to pay $5,141 in income tax because, again, with the feds, even though there's no state tax in Florida, you're paying tax on $10,000 pension, $15,000 IRA distribution, and $10,000 of earned income as well. And that will also include your FICA and whatnot, okay? But here you're going to pay 0.75 in property tax. You're going to pay almost $1,000 in sales tax. That's where Florida can get you, is the sales tax. $213 in fuel tax. The retirement tax friendliness is 77.99, which is significantly higher than like Alabama, a neighboring state, but much lower than Alaska. Now, is it worth it to be warm to get a little bit lower of a tax burden or colder to get a wonderful tax burden? I'd take the warmth any day of the week, but that's up to you. All right, so remember how they're calculating expected income this would pay. They're just using the deductions and whatnot, so nothing fancy there. But then they also calculate how much this person would pay in income tax at the federal, state, county, and local levels. It's just, these guys are smartasset.com, stellar. We calculate the effective property tax rate by dividing the median property value by median property tax paid by the median home value of each city. So in Marco Island, 50% are above this, 50% are below this, and then they're going to divide the median property tax to get you a median tax rate on your property. And so 0.75, that's not too high. It's not among the lowest in the world, but not too shabby either for Marco Island. Of course, I have no clue what the costs are out there. I imagine they're pretty expensive, the fact it's an island. We determine a sales tax. They have a nice little calculation, which I won't get into. Fuel taxes, and then we determine whether each city taxes Social Security. Finally, they created an overall index weighting to best capture the tax that most affect retirees. They gave a 4 times weighting to income, 3 times the property tax, 2 times the sale tax, and 1 times the fuel tax. I actually wish they would have given a 4 times the property, a 3 times the sale, a 2 times the income, and 1 times the fuel tax. But hey, it's their game. They can take the ball if they want. And they did. I don't have any problem with it. But at the end of the day, they're saying Marco Island, Florida has a 77.99, let's say 80% retirement tax friendliness. And again, that's much better than Alabama, neighboring state, but worse than other states. Alaska jumps out at you. But that's still a pretty doggone good tax rate for living in a place like Marco Island. Now, I don't know how you afford it, but now here's Defuniak Springs, which is up in the Panhandle. You're only paying 0.43% in property tax. That's stellar. So that's the state of Florida for you, my friends. Very favorable. But we all do that anyway. The issue is Social Security versus IRA. Why you need to maximize Social Security and reduce your IRA, part and parcel right there. So if you want to run your own numbers, go to heritagewealthplanning.com, tax tools, interactive tax tools, and here you are. As always, don't forget to subscribe, and you subscribe, hit the bell for notification because we do a lot of videos here. And then don't forget thumbs up and comments are always helpful to me as well. We'll see you next time. Thanks, guys.